Good morning, City Free in Chicago with the morning grain comments. On market, grain prices are lower overnight. I think some people feel that the market's taken a little bit of weather premium out of prices with the rain expected this week, and then the extended models are trying to be warmer and drier as the month of June ends and as we go into the 4th of July weekend. As far as the trade negotiations are concerned, yesterday we saw information both from China and U.S. that they suggested that the trade teams get together and start hammering out some kind of preliminary talks, discussion points for the two presidents when they meet at the G20 meeting in Japan later on. It really doesn't guarantee that there'll be a deal. In fact, some people feel that the two parties are too far apart and that the Chinese will not give in on key points that the President of the United States wants, and that they probably won't try to get a deal until after the 2020 election. If the Democrats win, they may lift the tariffs. The Chinese also want immediately tariff lifts if a deal is signed, and some people in the United States would like to do that gradually just to make sure that the Chinese follow the rules that they agree on. There was an article written that if there's not a deal, and if Congress can't come to grips on making a deal with Mexico, it may be harder and harder to get new trade deals with all these countries. In fact, the article went on to say that farmers may need a third subsidy payment to help with the lower prices. We also note that open interest continued to decline in the July contract, suggesting that we are reducing open interest as we get closer to first notice day. There really isn't a lot of new news for the bulls at these price levels if we have normal weather in the month of July. What's interesting is that our weather guy yesterday says he could see August warm and dry. He could also see September warm and dry. He could also see an early frost and freeze. 2 out of the 4 analog years that he's looking at it did have an early frost and freeze. And with the crop planted as late as it is for corn and beans, that might have some issues, especially in the eastern Midwest, especially northern states like Wisconsin, Michigan, and even northern Illinois and northern Indiana. So that means that potential higher prices are not over. We just might be taking somewhat of a pause. Also, other stories about China trying to bring in as much meat products, especially beef and pork, into China with some of the storage at their ports completely full. We also noted that Brazil is not going to increase some of the subsidies to their farmers this year and actually will raise interest rates on the cost of production down there. And we also finally have seen the funds yesterday. They basically were sellers of wheat and corn. They bought a little beans and they bought a little soybean oil. We now estimate the managed funds are long about 15,000 wheat, long 190 corn, short about 40,000 beans, and we'll just kind of see how they want to play out with these new positions. Do they want to add to the corn position because the corn crop may be smaller and that there might be bullish weather down the road? Do they want to cover their beans, or do they want to increase their beans if there's no trade deal between U.S. and China? As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.